has given notice he wants to speak on item 6 and 7. Right. Any declarations of interest other than what is contained in the register? No. And of course, welcome to Lauren, who's here to give a presentation of the auditor's letter. Well, there's nobody from the public, but Keith, of course, is acting as a member of the public today.
Would you like me to speak on both together or separately?
Both together, please.
Okay, on the audit of the accounts, clearly people like Craig do a marvellous job of keeping good track of the council's finances. And since the dark days was losing money in Iceland with previous treasurers, I believe the council's treasury function is well run here. But I think it's important that the audit and the auditor's letter is not misrepresented as actually a statement that the council is well run and the council collectively is making good decisions, but actually it's a statement that the finance department are actually keeping a decent log and doing their part of the functions well. In this letter from the auditor, it mentions a couple of things, one of which is the public interest report, and I have spoken to John Gregory about doing one of those on the car parking charges, because obviously it's a large issue which is potentially dubious as to whether we are charging the car parking charges legally and validly, and also we've raised the charges by £200,000 and the income has dropped by £200,000. So I do believe that's an area that needs auditing. The other issue I have a big issue with is on the internal audit, which we have major projects that are going wrong. Things like the depot, £600,000 job is now working out as a £2 million job. And in the auditor's report here, internal auditors, we clearly say we haven't got a risk register for the project, and it was set off without a business case. So there's a large number of issues which are going through the internal audit at the moment. I don't think that those functions should have satisfactory against them. I think they should have in need of improvement, because we are failing on major projects. Projects that are down and pushed ahead as costing £600,000 are now costing £2 million. And we do need tighter controls and people to actually do a proper business case and a proper risk analysis up the front of projects, rather than continuously having them signed off and urgency decisions from the chief executive. Oh no, we need to urgently approve this because otherwise we won't get the building work done in time. All this stuff needs to be done properly, which is why we should have business cases for expensive projects, and we should have a risk register for expensive projects. And when we do it for all our minor projects, but for the really, really important things like the depot move, it's been a total farce. We bought the depot over about a year and a half ago almost now. It was May 2015. It sat empty with business rates being paid on it, and now we're trying to get it to built in about 4 or 5 months. If you watch Grand Designs, it's exactly how you don't do a project, is to try and get a builder to do it in just a few months. It's an absolute disaster, and that should be picked up by the audit, and that function of the council should be put into need improvement. Thank you, Chair.
Is that both items covered?
Yeah, I've whisked through both of them, but I can talk a bit more if you want.
No, I'd rather you not. It's a matter of your opinion that you put to the committee. Thank you very much.
And I can take points of clarification, I believe.
Right. The letter, would you like to, Lauren?
Yeah, thank you, Chair. So the annual audit letter, as I'm sure you're familiar with, is just a requirement of us to present the key findings from our work with you throughout the year. So we're required to present this by public sector audit appointments. So a lot of what you're seeing here is what we've already presented to you, so there's not really any new information, so I don't think we need to go through it in detail, because a lot of this we did at the last committee meeting. So just to summarise, if there were any particular issues that we wanted to highlight to the public, we would use this annual audit letter to do that, but there's not anything in particular that we need to highlight, other than the fact that obviously we issued an unqualified audit opinion, as you know from last time we met, and also we were happy that there were proper arrangements in place under the value for money requirements. One of the things just to point out from this is the certification of the housing benefit grant. So the work on that's still underway, and the deadline for that's the end of November. So we'll update you on that in due course when that's completed. Again, we'd just like to say thank you to Craig and the team for working well with us throughout the audit. And just to point out, I guess that going forward, the finance team here and ourselves will be working closely to try and put in place the right arrangements to enable us to bring forward the deadline as that happens. So Craig and I had a discussion earlier about sort of dates and those kind of things, but we'll be working closely to make sure that we're able to meet those new deadlines.
Any questions from members?
I had a couple of questions around about the new deadlines. What have you put in place so far, Craig?
Yeah, I can elaborate on that one. As I mentioned to Lauren earlier on, I've actually been speaking to colleagues in neighbouring authorities from the likes of Rugby, North Warwickshire, Tamworth, White Forest, also Warwick, as to how they do a close down process, what they have understood to be their pitfalls, so we can actually share best practice. Another authority, for example, said they had a problem in actually the first stage of the close down process. Sorry, they did the first stage well. The latter part of actually producing the financial statements from the trial balance took them a long time. And I said, well, ours is completely the reverse, so we're actually going to have a meeting in December to actually say, well, what does everybody do? How do they do it? So we can actually share best practice and help each other out rather than reinvent the wheel. This next year's close down is the final dry run we will have. So we want to get an end of May completion for financial statements, because the year after that it is set in actually that we have got to have it done. So we are making progress, and we're scheduled to have a first meeting in December and then set up different working groups if need be. So one group can look at capital, one group can look at revenue, collection fund, etc. etc. So we can get the specialist officers involved in that.
Sounds like everything in hand.
I'd like to think so.
Anybody else? Can we move on? Green Paper report, please submit it to the council. Thank you. Internal audit half-yearly report.
Chair. Yeah, this is my half-yearly report, which shows progress against the current year's internal audit plan, which was approved by this committee in March, and also provides you with a summary of the findings of both the main reviews and the follow-up reviews that we've done. On page 21, that shows the internal audit plan for the current year and those audits that we've been completed and those that are in progress. And then over the page, on page 22, is a list of follow-up reviews that need to be completed during the year. And from the work that's already been completed, even though we've only got 2 full-time employees within the team, I'm quite happy that they will achieve 100% completion of the plan by year end. So from page 23 onwards, that provides you with a summary of the findings. There was one review that was brought forward from last year's plan, which was on homelessness, and then there's the follows on from the 16-17 audit plan. I just have to point out though that these summaries are a snapshot at the point in time that we completed the audit, and they could well have acted on recommendations and improvements that we've highlighted, but when we report the follow-up reviews of these, I'll be able to highlight which, if any, are outstanding or not. From page 29 and page 30, that's a review of the follow-up reviews that we've completed. We've checked 48 recommendations to make sure they've been satisfactorily implemented. Only 8 are outstanding, which is 17%, which is quite encouraging to note that they are taking action when we pick up areas for improvement. And I think that's all that I want to say. If there's any questions.
Any questions from members at all? Yes.
The homelessness report, it says that there is 200,000 still outstanding. What are they doing to collect that in, and do we know what's sort of age these debts are?
I haven't got the detail of the age, but it resulted in, there was a restructure within housing, and I think there was some confusion as to who was then responsible for recovering this debt. But I know for a fact that they've taken this on board, and they've made it quite clear, and they are now taking action, because it's a lot of money to the council, £200,000. So it was something that we highlighted during the course of the audit. So I know by the time we finished it, they'd already started action in that point.
And is there plans in place for them to report back on how much of this money's been
When we do the follow-up review, we'll check to make sure that it is now under control. And when I report it'll be in June of next year when I bring my annual report forward, that I can tell you what the follow-up is on that. But we will at it.
And then with regard to capital projects, and I know Keith's already raised this, but the road walk resurfacing, for example, there was no business case on this. And also with, there was, the reports were not recorded in the intent system. So obviously I just need to echo Keith's concerns there, I think, regarding procurement of capital projects. So I just wondered what was being done to address these.
Yeah, having a business case, it tended to be a trend that came through. We just selected these capital projects at random and looked at the process, and that did seem to be a trend. But what we have asked them to do is to determine now what the purpose of the projects was, so that they can look backwards and reflect on whether the objectives of the projects have been achieved. So although there was no business case in the first place, that's what we've asked them to do as part of the recommendations, to be able to put something together to go back and reflect.
I'll ask Craig to come in on that one.
What we do as well regarding the business case, and this, note in the comments in this report, is there is a scoring methodology within it, so we can try and prioritise the limited resources that we've got. But if there are certain needs for a capital scheme, this one being a prime example, it was a health and safety need because of the deterioration of the surface, they would override. So if there's a legislative requirement of disability, health and safety, or it's an investor safe, so if they can demonstrate that it is an investor safe, it doesn't go through the scoring for us to assign limited resources. So we've taken it on board anyway and said, yes, we'll get business cases done to try and identify each of the specific projects within the capital programme. So there is that flow and that sign-off through the corporate asset management team.
So it's not a training requirement, there's no lack of training or anything involved?
No, it wasn't a training requirement, no.
Okay, thank you.
I just wondered, Craig, could you explain what it means to have a business case?
It's the project manager, so it's the officer who wants to put that business case forward, that capital project, to say, well, this is how much it's going to cost in capital. This is what the revenue implications are. So will it save us money? Will it cost us more money? So will it have insurance implications? Will we have ongoing revenue costs for leases and things like that, or licence costs? They have to do a risk analysis within the business case. They have to put scores against how it meets the corporate aims. So it comes up with an overarching score. They have to do what's a do-nothing option. So it is them to try and sell the scheme to the corporate asset management team. So we can say, well, yes, it does meet those. So we're not just trying to say yes to everything. We're trying to prioritise.
Yeah, they have to demonstrate what the benefits are of spending this money on the various projects. So then afterwards you can go back to the business case after you've done the work to make sure that the benefits that you set out in the business case have actually been achieved. So it gives you a document that you can reflect on afterwards.
John?
Chair, I'm just slightly confused about the circumstances where a business case is justified. Assuming the road walk surfaces were in a dangerous condition and the need was to make them safe, and you can start trying to balance that against insurance, and I presume in some cases you're self-insured. So in a sense you're having a conversation with yourself, and in the meantime there's a surface which needs immediate almost treatment. and there's the issue of public safety, which would override all that nice to have, but not necessarily going to deliver any real benefit to the council. So if you know where you are and you know who your contractor is because of their specialisms, then you just get on with it and get the job done, I presume.
I don't know, I mean the project manager would be able to answer that better, but
It does look at specifications as well, because you can get a job done and it's the qualitative issues that you need to consider, which have obviously different sort of pricing structures, but you know, you could increase the amount you spend, but it will have a much longer life. So you need to reflect that in your business case and consider those issues as well. So although it's something that we have to do, there are still some issues that you need to consider and put into a new specification before you go out to procure it and get quotations or a tender in place.
Anybody else?
With regard to the depot, are there any plans to do a review of what's happened and so that it's lessons learned for future projects?
I've not seen anything in place, but there is a project group in place at the moment which looks at the specification and the delivery, so we can get the works completed in the migration of staff and resources from St Mary's Road to Gresham Road at some point. No, and I think they meet on a weekly or fortnightly basis. But as far as the overall project goes, I'm sure there will be some reviews so we can actually look at what we could have done to improve.
I think there are plans to take reports to Cabinet and decisions to be made at Cabinet level, because the planning application has recently been approved. So now they've got the approved planning application, they can start pulling together the specification in more detail, and that's when they'll know exactly what the pricing structure will be and what's needed. But that will need Cabinet approval.
Sorry, you can't speak. You're just a member of the public. Councillor Brindley.
I just wanted to pick up on the fact that there seems to be a couple of projects in here where only one supplier was either approached or used. For example, the lighting replacement and the replacement of the all-weather pitch. With the lighting, I can see that it was perhaps because there's only one company with the expertise required, but I know there's a number of companies that can replace all-weather pitches. I'd just be interested to know why exemption was received for that, for them to only use a single supplier, because it was expensive, and as someone that plays on that pitch every week, a brilliant job wasn't done. And when we're talking about value for money, surely one of the best ways to get value for money is to put large projects like that out and to try and get quotations from various companies and see what they're going to deliver. Because I'm not convinced we did get value for money from that project at all. And the fact that it seems like only one company was used could partly be the reason for that, I think.
I think with the lighting project, they did say that they went to specialists, but the specialists they actually went to also got quotes from other companies to show that they were providing value for money. And that's why we picked up on that, because although they're saying that there was only one supplier that could do the work, by going out to other contractors, clearly demonstrated that there are other contractors out there. So we did pick up on that one, that you know they should have gone out wider. With the all-weather pitch, that was a framework consultant they went to. So when you've got a framework in place, the market's already been tested. So you have a list of a framework contract there. So you go out and market test and you get suppliers on there, and you maybe you could do a mini tender if you wanted to with people on the framework agreement. But if there's a framework agreement in place, our contract procedure rules allow us to go to suppliers on that framework because the market's already been tested.
You have with that?
Yeah, I'm just a bit confused about how the market could already have been tested when there's only one.
Could you just tell me a Christian name? Because I don't
It's Catherine.
Catherine, thank
Yeah.
you.
So when you say like market's already been tested, is that from this council personally or
Not necessarily.
or nationwide?
No, not necessarily. There are nationwide framework agreements. It depends on the urgency sometimes, because it does take quite a long time to go out and do a full tender exercise here locally. But if we know there's a framework agreement already in place that we can go to, then it saves us a lot of time and effort. So it depends on the urgency of the project as well.
Anything else on that report, John?
Chairman, just follow up those remarks, a question really about the framework and who carries responsibility for doing a good job. If it's not been a successful exercise, in other words, if the outcome is not satisfactory, does the framework contractor, you know, the specialist framework consultant, do they carry any responsibility for the quality of work done?
They would.
Because you are putting yourself in their hands, aren't you?
Yeah, you are
Yeah.
putting yourself in their hands, yes, you are. But they will have considered all the qualitative, there will be reports as to the process that they followed. I mean, ESPO, the Eastern Shires Purchasing Offices, which is a huge purchasing organisation.
That way you went?
They develop a lot of framework agreements that we can then just go into.
Yeah.
So ESPO in themselves have got, you know, sort of good reference. You know, that's what they specialise in, purchasing. And they've got specialists that cover a lot of different fields.
It does imply that they carry some risk and carry responsibility for the outcome.
Yeah, they could.
Yeah.
We do rely on the fact that they have done all their checks. But you know, we do have access to reports of the process that they went through and what considerations they've made and the scoring mechanism and everything else. So we do have access. It's not just, you know, they've done it. We have got access to some information to check on the quality. But I agree with you. We do put, you know, ourselves in their hands that they did it properly.
Right. Anybody else on that report?
Sorry, just one more quite quick one. I just think if we are doing, as you're saying, we're putting ourselves in other people's hands, I think what's more concerned is the fact that the evaluations are then not being carried out. So in the case of that one, we've put ourselves in the hands of these people that are in the framework, we've gone to this supplier, and as far as I'm aware, no one at the council has any idea whether they did a good job or not, because it's not been evaluated.
Yeah, I think what we may need to do is go to the project manager and look A at the specification, B at the project sign off from the contractor's point of view. So, I mean, not being aware that, you know, from your opinion that the quality was not as good as you would have expected. So that may be something that needs to be brought to the attention of the officers responsible for that project to say, well, what happened there? Yeah.
Anybody else then on item 7? If not, then we move on to item 8, Treasury Management Monitoring.
Thank you very much, Chair. It's my report. It's the first one for this financial year of Treasury Management, so I don't tend to bring one for the first quarter, too early in the year. It's been a fun first 6 months of the year, shall we say. We've seen the new referendum result come through. We saw sterling fall dramatically. Although surprisingly in the second quarter the economy has bounced back quite a bit. It's not suffered the sharp deceleration that everybody was expecting, and inflation is now starting to pick up. But that doesn't withstand the fact that the Bank of England did cut interest rates from 0.5 to 0.25, which had a huge effect on our investment returns. So going to section 4, the economic outlook, which is on page 32 of the agenda. There's a table in there which gives the interest rate forecast which Capita did at the time I wrote this report, which was predicting that the bank rate would drop to 0.1, so we'll see a further cut. Since this report was written, there's been new data coming out, and we don't think we will see a cut now to 0.25. Mark Carney, the Governor of the Bank of England, has indicated that we won't see any reason for the bank rate to cut any further, but it's not likely that we'll see interest rates start to go up until he's finished his term, which is back in 2019. So it's not as doom and gloom as this table suggests, but it's still low interest rates for the foreseeable future. Capita are actually going to review this interest rate forecast after the US election result, because that would have another impact on what's going to happen to the markets. Moving on to the summary portfolio at table 5.4 over the page. As you can see, interest rates have dropped. The total managed investments at the end of March was £28 million, which was getting 0.89%. That's currently at £35 million, because at this time of the year I would expect investment balances to be very high, but the returns dropped to 0.7. A lot of our investments were held at that time in money market funds. If you look, we've got over £12.5 million at the end of September, compared to £5.5 million at the end of March. Reasoning for that was post-Brexit. When there was such turmoil in the markets, it was deemed the safer option to have it in those instruments. They were still getting good returns, but those interest rates have tapered off now to 0.28. So I will be moving money from the money market funds and place them in fixed term investments for 3 or 6 month periods with counterparties that are rated strongly, that can give us some surety of investment return over the next 6 months. The table, the chart in 5.9 on page 35 just shows how our investments were split as to what was held in money market funds, UK government, building societies, banks, etc. And you can see that, yeah, we were running at about 35% of our portfolio was held in money market funds up until Brexit in June, and then July it went up to nearly half of our portfolio. That was a risk decision that I took, that I didn't want to put money in banks and lock it up in the banks until we knew what was going to happen with their credit ratings, the confidence in the market, whereas money market funds are all AAA rated, so there is more security in those instruments. As you can see, since then, those levels are tapering off as we've seen the market stabilise. Going over to page 38, which is the average balances and returns for the year to date. What I am pleased about is that our investments are averaging for the first 6 months 0.76, which is comparable for the whole of last year. But with interest rates as they are now, that will drop off. £5.21 onwards, and that's on page 39, refers to our property fund, which did take a hit post-Brexit, as did all property funds, not just local authority ones. The blocks, the grey blocks, indicate the return that we get each quarter. So it varies from about 4.2% up to 4.8%. We get a quarterly dividend on the property fund. So the £1 million we've got invested is generating over 4% return. And that's the yield that's generated from the rents that they are getting from the properties that they're letting. The black line in the middle of the table does show what that £1 million was actually worth, because obviously capital values in an asset will change, they will fluctuate. The £1 million we've got invested, as soon as we invested it, it was devalued down to £940-something thousand, and that's because of stamp duty. You buy an asset, you're paying stamp duty straight away, and then you rely on capital appreciation. And you can see it was appreciating. We were getting capital growth on that up until Brexit. And the fund decided to revalue it down to about £920,000, that £1 million. I am not concerned about that, because this investment is a long-term investment. That change in value from £1 million to £920,000 doesn't, because of the type of investment it is, doesn't hit the general fund. It's shown in the accounts as a change in valuation, but it's the 4% plus that gets shown as investment income. Change in the value is held in a reserve until such point that we sell that asset. So I'm treating it as a 3 to 5 year longer term investment. So we should be seeing, as you can see, since Brexit, the capital values have stabilised, and hopefully with the indicators that are coming out from the Bank of England, inflation changes now, inflation's starting to go up, we should start seeing that those levels creeping up again. So I'm not concerned about that fund at all. And the latest indications that have come from the fund managers is that people are still investing. There has not been a single call from a local authority to withdraw funds from this property fund. So there is still confidence in that sector. So I'm comfortable with that. 5.29 on page 41 just shows the activity that's happened in the first half year, so what new investments we've placed. And you can actually see the change in interest rates that have been offered. For example, Barclays back in May, for a 3-month deal, were offering 0.49. Barclays in August was 0.39. Lloyd's, a 6-month deal in July was 0.8, and in the middle of September it's down to 0.65. These rates are dropping off, and they are going to stay at these levels now for a long, long time. The 5.3, the debt activity, shows that we did repay £2.5 million of debt. It was naturally maturing debt, it was due to be repaid for the HRA. We've not repaid it, so we've increased the under-borrowing position of the council. And we can sustain that because of the cash balances that we're currently holding. The 5.37, this is moving on to page 43, shows the impact that this has on our returns post-Brexit and the change in interest rates. We're forecasting on the general fund approximately £130,000 shortfall in investment returns. And just to put it into context, in September I had budgeted for 1.2% investment returns. We actually got 0.68. And that's because at the time we set the budgets, interest rates were forecast to increase. They've gone completely the opposite way. That's a huge disparity from what we budgeted, and we've built it into the medium-term financial plan as well, because obviously from a 3-year view looking forward, that is a huge charge, a huge risk to the council as to what we get on our investment returns. So we're trying to make sure that future budgets reflect the loss of investment income that we had originally forecast. The prudential indicators in section 6 are all going as we expected. These will be updated as part of the mid-year review that I'm required to do under legislation, and it will be reported to Cabinet at the end of this month and to Council in December. The capital expenditure has increased from the original indicator, as I've stated, in 6.2, and it's because of new projects that have been added to the project, to the overall programme. I've got nothing else to add. If anybody's got any questions they want to ask them.
Well, I just want to say a big thank you to you and your team for the professionalism that you're showing to the council in the management of our finances.
Thank you much. I'll let the team know.
And I hope that that's recorded. Any questions?
Two, please. Okay. One is, could you explain to me what you mean by money markets? And could you also, do we look at ethical investments as well, please?
Okay. First thing, money market funds. These are what's known as a pooled investment vehicle. So I will place, for example, I'll invest £1 million in this money market fund, and they've got designated fund managers who will look after that £1 million along with everybody else's £1 million that they've put in. So everybody's pooling their resources into this one money market fund. These fund managers will use that cash to go and buy different types of investments. So they might do fixed term deposits, they might do notice accounts, they might do certificates of the deposits, they might do gilts. So they're doing the diversification for us, and it's actively managed, which means that the fund managers who look after each money market fund look at the markets every single day and will either buy or sell to try and de-risk as much as possible. Hence that they are AAA rated, they're the highest credit rating you can get. So that's what a money market fund is. Ethical investments, yes, we do consider ethical investments. If we're investing with a bank or building society, A, it's got to meet our credit rating criteria. It's got to be in a country that meets our minimum credit rating criteria. And C, it needs to have ethical considerations as well. So we won't go willy-nilly and invest in. I mean, we have had questions in the past. Have we bought investments in tobacco funds? No, we haven't. We will steer clear of that ethical investment. The reason why I do show the full list of who we're investing with is the transparency, so you do get the full picture, and you can challenge if need be.
Anybody else? Are you happy with your report, Alan?
Yes, thank you, Chair.
Thank you.
Right. There's nothing else on that agenda. We move to item 9, which is the risk management policy.
Okay, thank you. Yeah, This report presents two policy documents I'm asking this committee to approve. The first one is the Risk Management Policy and Strategy, which is at Appendix A on page 50. Starts at page 50. It was last approved by this committee on the 14th of January 2014, and since that was approved, we've carried out a review of our risk management arrangements in consultation with our corporate governance group. And the corporate governance group is made up of all of our directors, myself, procurement and finance people as well. In paragraph 4.1 sets out the main changes that we've done. The main thing that we've done is we've looked at the content of our strategic risk register. The register, before we carried out this review, was about 75 to 80 pages long. It was just getting out of control, really. Some of the risks that were in there had anything between 25 and 30 mitigation controls that it was relying upon. So from an audit point of view, it was very difficult for us to make sure that all of these controls actually existed, they were effective, they were being complied with. So we've tried to concentrate on the key mitigations. Within the audit plan, from our previous report, we had got risk management there as an audit. So this was the starting point of that audit, really, in looking at the arrangements. So what we can actually do now, because it's much more manageable in size, I think we're down to about 20 pages now, so we're concentrating on what the key risks are and the key controls that mitigate those risks. We can actually do some audit checks now on those controls, which wasn't possible to do before. And the other one is we've looked at for each risk we need to consider the impact, if that risk is to happen, what the impact would be and what the likelihood is of the risk actually occurring. And we did have a 6x4 matrix, but what we found, where we've got 6 descriptors, some of them were very, very similar, and so it was difficult to choose which one would go, and there was a little bit of guesswork, I think, that was going into it. And when you've got several people feeding information into the register, you don't get consistency. So we reduced that now to a 4x4 matrix, so the descriptors are much clearer, so we should get consistency. And then we also looked at the way that our operational risk registers are being managed, because there wasn't actually a process in place to manage our operational risk registers. Each director will have an operational risk register for their service area. So that was what the review of our risk management arrangements are, and we've reflected the changes that were proposed from that review into the updated risk management policy at page 50. The second document is our performance management framework. This has been in existence for a number of years now, but it's never been presented to the audit committee. But performance management is a key part of the governance arrangements of the council. As an audit committee, you're responsible for those corporate governance arrangements, so that's why we brought the document to you for approval this time around. As part of looking at the framework, we have identified some areas for improvement. So on the very back page, on page 76, there is an action plan setting out what those improvements are. And because risk management and performance management, I think, are high-profile issues around corporate governance, I think it's quite, we need to have them reflected within the council's constitution. So the third recommendation is that you recommend to full council that the constitution be updated to reflect these updated documents. So I think that's all I have to say. Are there any questions?
Anyone with any questions or on the risk management? Yes, Leslie.
I just wanted to say I found the risk register one really clear, concise and a lot easier to follow. It was excellent, I think.
Good. Anybody else? Can we agree the recommendations then?
Let's be quick. I was just going to ask you, Linda,
Yeah.
we've got this list of dates. Are we on target to meet those?
On the action plan,
Yeah.
yes, we are at the moment, yes. A lot of them are in hand. The performance boards, they're in this month. So, because that's the first one, November 2016. And I reviewed the format of the strategic performance report. I'm already in discussions with school boards where those changes should go. And then the others fall into next year. So we are on target now.
Anybody else? Can we agree the recommendations on page 48?
Yes, sir. I'll do that.
Seconded. All agreed? Any against? Any abstention? Thank you very much. And that's the whole of the business.